Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the second week of December, as you can see, starting from 16th of December 2024. And yeah, before starting the weekly breakdown, let me show you the news. Monday, Tuesday, Wednesday, Thursday, Friday. This week there is a lot of news, as you can see, starting from Monday itself, Tuesday, Wednesday, Thursday, Friday. Every day there is news, so it's gonna be very tricky. There are situations like this in the market, and these are totally normal. These are the situations where we need to preserve our capital and go risk off and only trade the highest probability setups on these weeks, because I have seen with my backtesting, with my experience, that whenever there is a huge amount of news, the market tends to do some very unusual things, bizarre things. That is why. And here on the weekly we can clearly see the next week starts from 16th of December 2024, and now it's bearish, right? On GBP USD, my weekly bias is clearly bearish going on to the next week. On DXY, it is clearly bullish, as you can see right around here. And my target is that draw of liquidity. And yeah, this is the weekly. Now going on the daily, the same sort of thing. On the daily, the change of character happened to the downside, and huge 3 black soldiers, as you can see, 3 consecutive red candles, or you can see bearish candles to the downside. Now we can anticipate a lower high or a continuation. Obviously I don't trade the lower high, I will trade with the lower low, but also it makes sense to make a lower high to then continue to the downside. So now going on Monday, my bias is clearly bearish, and on DXY, if I go to confirm my bias, going on Monday my bias is not clear. On GBP USD my bias was bearish. On DXY my bias is doji, like they are doing different sort of things. Like that is when I go to Euro USD to confirm my bias, and Euro USD is doing different thing. Like it is bullish. On Euro USD is kind of bullish, right? So this is the condition where you don't want to trade. This is the condition where you want to wait for the market to close. So not trading the Monday helped me so much, because obviously it didn't make sense to trade on Monday because the bias was not clear, and also on Monday there was huge amount of news which we trade, to be honest, but due to the correlation we decided to not trade. And if we had taken the trade, it would have been I don't know what we could have done, but it was a no trade day for me. So Monday was basically a no trade day, so no need to overcomplicate things. Just some days, just waiting is best than not waiting. In a week, if you catch one trade, bro, one good trade, if you catch one good trade with the bias, that's enough, bro, for the week. You don't need to trade always. No, don't go with the mindset of trading, I need to get a trade today. No, go with the mindset of I need to follow my plan today, I need to follow my trading rules today, and whatever the price gives me, I need to take it. That's it. So now going on Tuesday, my bias is bullish, clearly, because I trade the daily bias, I adapt, I don't predict. So also on DXY, now on DXY it's aligning, my bias being bearish on DXY and bullish on GBP USD. So look, just waiting for one day to close, just waiting for one candle to close, literally confirmed my bias, right? So if waiting for one day can confirm my bias, then why not, right? Why not wait? But also on Tuesday there was GBP and USD both news, and whenever there is GBP and USD both news, I don't trade. Simple as that. That's one of my rules. Look, I trade the London session and the New York session, right? London kill zone timing and New York kill zone timing. So if there is news on both sessions on the kill zone, there is no use trading. Even if you trade, that's a very high risk trade, and at that point I am just gambling. I am gambling the news, because I am entering before news, and I am break even my trade. After I break even my trade, I hold the news, right? That's one way of trading that. But Monday, bias not clear, not traded. Tuesday, due to news, I didn't trade it. So now going on Wednesday also, there was GBP CPI, so obviously London session I will not trade. So now going on Wednesday, my bias is still bullish according to how this candle closed, and going on GBP USD, my bias is again not clear. Going on Wednesday, my bias is again not clear because of how this Tuesday candle closed. That's not looking like a bearish candle to me, is it? To me it isn't. And also on GBP USD it was kind of bullish. Euro also it was kind of bullish. So also on Wednesday I didn't took the trade because my bias was not clear. Look, not trading some days are totally fine. you can monitor the trades. Obviously you are monitoring the markets. I am still monitoring the markets. I'm learning from the markets every single day. I take a trade, I didn't take a trade, I don't care. But next time situations like this, I can take the trades, right? So next time whenever a situation like this appears in the market, I will take the trades. Exactly what happened right around here. Whenever there is news, it goes up, it goes down, don't know, like it the market's bizarre, it's acting bizarre. So now going on Thursday, my bias is clearly bearish because of how this candle closed, and now it has also aligned with my weekly bias being bearish. You can see Monday, Tuesday went up, made the high of the week. Wednesday went down. Now we can anticipate Thursday to continue to the downside. Waiting for Monday, Tuesday and Wednesday literally gave me my bias for Thursday. And also on Thursday there is federal funds rate already done. So GBP news is on 5:30, so we can trade London. As you can see, we can clearly trade London session because GBP news, there is no London session news at our timing. So this is when I go to DXY to confirm my bias, and on DXY bias is clearly bullish, and on GBP USD my bias is clearly bearish. So that is when I go to the lower time frames. On the H4 we can see a beautiful change of character happen. You may be arguing, you may be thinking, why a huge move like this appeared in the market? This move happened in the market due to this federal funds rate. As you can see, the interest rate in America got lower. As you can see, it was 4.75% and now it is 4.50%. So that is why that's a very high impact news, as you guys know, interest rate, because it literally, the banks move the market, and whatever the banks do, we have to follow that. So now going on Thursday, my bias was clearly bearish. So if my bias is bearish, I am looking for sales, right? So if I'm looking for sales, there is a fair value gap, huge fair value gap. I don't trade fair value gaps. So the most ideal case scenario would be this right here. But using your brain, if you get your session, like if you get the move in your session, there is a huge fair value gap right here, right? So the price to go and fill up this fair value gap is so high probability, because the gaps in the market do get filled. I have seen it so many times getting filled. Whenever there is a huge gap in the markets like this, or whenever there is a new day opening gap and all, the market tends to fill up the gaps very, very frequently. I have seen it so many times with my own eyes, and I will trade that. Whenever I see that, I will trade that. In this case, there was a huge fair value gap to the upside, so we could have taken a buy. Yes, it was not aligning with my bias 100%, but obviously next time in the markets, if something like this happen, whenever there is a huge fair value gap to fill from the previous day, the price tends to go and fill the fair value gap on the next day. Like in this trade, we can use that information in our favor and take trades according to the information. 100%. You need to adapt to the market, right? The markets are not perfect, as you can see. We need to adapt to the market, and if the entry is in our session, like it was in this case, the entry was in our session, higher highs, higher lows, somewhere around. Even if I enter somewhere around here with a 10 pip stop loss right around here and targeted a 1:3, we could have won a beautiful trade right here, somewhere around here. And also there was no supply zone, so look, right? Next time if I see something like this on the markets happening, there is a huge fair value gap, look, print it in your brain. A huge fair value gap, the price going and filling up the fair value gap has so much high probability, as you can see, because this is what the market, and this is how the price moves. And then also my bias was bearish, right? Also the move happened with my bias. This trade I have taken on the M5. Why I have taken this trade? You may be arguing, there was no supply zone, there was a fair value gap. Why have you taken this trade? I have taken this trade because it was in my time window. Still in my time window, the price literally slowed down. This is the M5 entry model that I use. Higher highs, higher lows, higher highs, higher lows, some sort of accumulation right here. And after the accumulation, price went up, manipulated this high. As you can see, cheeky move right there. It manipulated all of the highs from this area, and then gave us a change of character, and I entered at the equilibrium. You can notice, right? This is a pattern I've noticed in the market so many times while entering. As you can see, the price accumulates in an area, goes up, for a selling example, goes up, sweeps liquidity from all of the highs, and then boom, a huge change of character happens with a huge volume, and that is when we enter. I entered with a 10 pip stop loss. As you can see, a beautiful move, call a 1:6 risk to reward. My bias overall was bearish, so this was a beautiful trade on Thursday. Even the New York continued with our session, so if I hold this trade, I would have passed any prop firms that is available in this world. So this was a Thursday. So on this week, Monday bias was not clear, Tuesday due to news, Wednesday also was very, very tricky. Thursday I could have caught two potential trades if I wanted, if I did my due diligence. But next time if I see something like this on the market, I'm gonna take the trade without any hesitation or reservation. So now going on Friday, my bias is clearly bearish, right? According to how this candle closed, Wednesday, Thursday closed. But also we know that when for a bearish weekly profiling, Monday, Tuesday went up, goes up most of the time. Wednesday, Thursday continues down, and then Friday basically makes the pullback of the week. We also know that. And also on Friday there was GBP and USD both news. As you can see, both London session and New York session that I trade, the timings that I trade, there was news. So obviously I was not interested on Friday because of the news. So this was basically the weekly breakdown. This weekly breakdown was very short because of the news, and I adapted to the news. And now I've made a mental model where I don't need to trade always. I only need to take the trades if it's high probability, and that's it. So exactly what I said happened, right? It was a perfect weekly profiling. Monday, Tuesday went up, Wednesday, Thursday went down, Friday went up, and made the perfect weekly profiling right here. There are three types of weekly profiling, as I've explained in one of my videos. If you guys have seen it or not, I don't know, but one of them are daily expansion, midweek reversal. In the midweek reversal, the reversal happens on Wednesday, and a bullish or bearish consolidation. Those are the three kinds of weekly profiling. This is the weekly breakdown. This week I didn't journal any trade, but let's see on the next week if we get any journals.